Hi, welcome to the Market Alert for Tuesday, the 6th of December 2022. So stocks, bonds, bullion and black gold battered as soft landing hopes fade. This is in response, obviously, that Powell has gone back to being more hawkish. Higher rates for longer is back. So that's why the markets were lower yesterday. US stocks declined as yields and the dollar gained on strong IMS data as well, which was out yesterday. Yield surge hits stocks after ISM services top expectations. So let's have a look at that now. There is no news today, as you can see. Just go back to yesterday, and they came out at 56.5. They were forecast. Previous was 54, forecast at 53.5. Market wobbled a bit, but managed to rally back off this initially, but has been down thereafter and down on the overnight as well. So it looks like the bear market rally is coming to a bit of an end at the moment. Also, the implied volatility. Let's have a look at this. We've got start off with the 3-month. We're looking at 18.42 for yesterday. But you can't see a lot. You can see that we've got a bit of support to the left there where the market has topped out before and moved lower. And then once it had increased by 100%, the market then saw prices moving back to the upside. If you have a look at the 6-month chart, you get a better idea. We're in the range. We're not quite as low as we were at 14.72. We've been down to 16.95 and 17.05. And then in the 12-month chart, if we have a look at that, it's not too far away. Again, you can see that the 14s and 13s were sort of the lows. And it's quite conceivable that we don't get down to those lows before the market starts to move lower, but you never know. But if we do, and the market continues to move higher at the moment, then we'll look for these sorts of numbers for the correction in the market, which you'll see happened each time these areas were actually hit. So let's keep an eye on this one going forward. And finally, let's just have a quick look at the gold-silver ratio, which saw a massive reversal yesterday as the silver price was monkey hammered as the dollar gained strength. Right, let's kick off, have a look at the stock markets. We'll start with the Dow and then move through to the metals. And in the Dow, you can see the market is lower in response to the ISM data that was released yesterday afternoon at 3 p.m. However, the market's still holding at the moment above the 5-bar moving average. We have got lower highs for each day at the moment as well for the last 3 days, which is always a bit of a concern. The market will need to start looking at holding these lows if we do see the market move lower initially today. The low's not too far away in the 30-minute chart, which you can see. At the moment it's trying to hold at the close, but the low will be very, very important for the Dow and no doubt the DAX as well. So there's the news. The market was shot down, then it came back, struck at the DP 20-bar moving average, and then sold off as the yields higher. And the market then bouncing off Friday's low, which is amazing, but given how far away it was after the NFP numbers. So it's got to hold at the close. If not, the low could be tested, and it's going to be a very important area. You can see there's a lot of volume down at this area too. But don't be surprised if they have a run down to it, shake a few people out and then try and bring it back. In the German DAX, similar picture, the market starting to make lower highs, and also yesterday you can see they tried to bring the market back, bit of demand there. Market very quiet, no news today, market's going to have to make its own direction anyway. And in the 30-minute chart, yesterday you can see a slow decline, market finding support at the 200 MA, broke it, came back, then sat on it, then broke it, then it became resistance and the market moving low in response to the ISM numbers, and you can see rallying back to the 200 MA, failing there and then coming back as well. But then we ended up with a 78-89% retracement at the S1. The market bounced off this, traded to the DP and the 50 EMA, and then once closed back below the 5 bar, the market is then traded back to 62.78% retracement overnight. Watch the low in the DAX as well in case you get a shakeout down to this level. See if the market will hold yesterday, where the market saw the buying come in following the news. In the 5 minutes for yesterday, let's just have a quick look. And you can see it was a fairly choppy session yesterday. I managed to get a few trades in, which I'll show you in just a moment. Market moving lower in the futures, then in the cash, and then another move to the downside, and then it just traded sideways in a range, which you'll see there. There's the news at 3 p.m. yesterday, and then the response thereafter. As I said, it rallied a bit, and then the market declined. So in the 5 minute chart, like I say, you've got to watch this low of yesterday. You can see there's a bit of buying there at the moment, trying to bring the market back. And if it does, then watch it going up towards the close and the DP. Trades for yesterday, not a lot to shout about. It was sideways after that initial move in the morning. 83.17 win-loss ratio, and obviously the profit factor 27.43. It's really, all of this is negligible, frankly, because it's just one morning's worth of trading. So, but nonetheless, it's a start for the week. It's better than a loss. Hopefully things will pick up a bit more today. And in the S&P, we can see this yesterday down to the 20 bar moving average, still struggling with that 200 MA and the 89% retracement. Again, you've got 3 lower highs there as well. Markets got also a momentum problem on the upside, which you can see there as well. 30-minute charts yesterday morning on the electronic market struggling to move higher, broke the DP, then the main market opened, we had the news, and then the decline thereafter. And at the moment sitting at the close, the low again is going to be very important for the S&P. In the FTSE 100, still looking fairly strongish. Trend remains to the upside, you can see there. At the moment sitting or trading just below the 5 bar moving average. Tiny range for yesterday. Like I say, not much news, and we haven't got much in the way of news. Well, certainly the zero economic news, and not much for this week. So yesterday morning, the market trading off Friday's close, managing to trade up towards the BRN there, which is 7,600 before selling came in with the US, and then the market back down to the DP. Managed to get above the DP overnight, but you can see the market sitting at the 200 and the other averages at the moment, above the close and the low as well. So again, a bit of firmness there compared to the other stock markets from the FTSE 100. In the currencies, GBP, JPY bouncing off that 78.89, trading up to 62 on the overnight. In a bit of bounce there as the dollar moved higher yesterday as well. 30-minute chart choppy, but the 200 MA lending support to this market, plus a retracement there of 89 before moving higher. And this has continued into the Asia session, which you can see trading up to the R1 and also bouncing off the high and the 20 bar moving average as well. That said, market's now bouncing back around 62 to 78% retracement there, isn't it? Yeah, just sitting there at the moment. So keep a close eye on this. In the pound, also still showing some strength after moving up from 103 in October, or 103. 103. And prices there sitting just above the 200 MA. In response to the dollar yesterday, the market down. If the dollar has a bit of a move to the upside on the basis that they've no longer talking about reducing rates or pivoting, then you'll see the pound move lower. 30-minute chart, you can see there yesterday after the US Open, the dollar index higher, the pound down, and stuck in a sideways range overnight. Double bottom retracement there, back up to the 50 EMA, DP, and then the market back towards the close, but sitting on that 200 MA at the moment, finding support. And again, like the stock markets, watch yesterday's low in the pound. Finally, US dollar moving back to the upside, hence the pound down yesterday. Trying to get back above that 200 MA, which the market will always attempt to do if it can. There you can see yesterday as the dollar index opened, official time opened, you can see the market trading up, putting in a new high at the 200 MA on the upside in the 30-minute chart, and stay above the close, the DP and the 50 EMA to continue to move higher. If the dollar's higher, the metals are lower. Silver hammered yesterday, which you can see there in the daily chart. In the 30-minute chart, it looks dreadful. We came off the 23.50 level or around that area on Friday, market sideways. Then we had the London fix, and why not just give it a hammer in? So they did. They had the opportunity to do so. You can see massive selling there, and then prices being brought back to 22.50 there before moving back down to the 200 MA. And we've got the close and low of yesterday as well, which you want to keep an eye on, because if they're broken, then it will continue lower. Gold also hammered to the downside yesterday, or not what you would consider a really big move in the US dollar. So you can see how they wanted to hammer the price yesterday. Gold down massively there yesterday, as you can see, down several dollars, and straight through the 200 MA as well, which then became a resistance, moved further overnight. The price consolidating at the moment, again, the close and low, very important. Market sitting at the close at this time. So there we go, a quick roundup of events. Bit of weakness coming into the stock market, strength back into the dollar, which is obviously had an effect on the currencies and also on the metals. No news today. Market will have to make its own direction, so we'll just have to wait and see and trade what we see as well. Okay, that's it for this one as ever. Thanks for watching. See you in the next.